The S&P 500 has crossed 4,000 for the first time ever. Let's get right to the equity markets with Victoria Fernandez. She's the chief market strategist at Crossmark Global Investments. So listen, we have more signs of an uptick in economic activity. We got the ISM number today hitting the best manufacturing activity in 37 years. We've seen some great consumer confidence numbers lately. Private hiring is up. So I'm wondering for you, with markets being closed on Friday and the government putting out the all-important jobs report and the expectations for this report to possibly be a blockbuster, how are you positioning yourself?
Yeah, Conway, it's interesting because the expectations for this jobs number are all over the board. So there really is a potential for a market moving number to come out. We're seeing expectations right now anywhere from about 230,000 all the way up to that seven-figure 1 million number, right? So for us, though, it's all about that longer term strategy. And it's all about the things you mentioned a moment ago. Consumer confidence is higher. ISM numbers were off the charts today. We're seeing solid numbers coming out, economic numbers, and the potential for earnings continues to move higher, the expectations on earnings. So for us, we're continuing that trend of looking at the names that we think are going to have the most benefit going forward. For us, it's still some of those growthier tech names that we've liked along the way. They've had a pretty significant pullback, so it's actually an opportunity for people to get in on some of these names if they didn't already own them in their portfolio.
What about other parts of the sector? Other parts of the economy. With people getting vaccinated, it seems like just overnight, people are going back, the economies are reopening. Do you want to look at beyond tech, like to airlines or hotels or some of the fast food chains or the fast casual dining chains?
So I actually live in Houston. So in Texas, we've had this reopening going on for a little while and just moved to 100% reopening not too long ago. And there is some opportunity there, right? We always believe in our portfolios that you're not all in on growth or all in on cyclical and value. We use that barbell terminology to talk about it. And so you want some exposure to that. You want some exposure to cyclicals. And whether that's in fast food, like we have exposure to McDonald's, or whether it's in home building, we have exposure to Home Depot as people get in there and do that, or to a Walmart, Nike. All of these are kind of retail, feel-good consumer names that we have in our portfolio, and we like that exposure. We just think you need to overweight some of these tech areas where you're looking at semiconductors because there's a shortage right now, right? And so there's going to be continued demand there. We're looking at the areas of broadband because we know we're going to need more of that as people continue to work from home, even though the economy is reopening. So have exposure to both sides, but we have a little bit of a larger overweight on the tech side.
But that overweight, how I'm wondering about the tinkering with that. All of this is happening in the context of Treasury yields moving higher. We talked about the potential for the jobs report. Also, you got the ISM services index that's going to come out next week. So you might get more signs of a pickup in economic activity. And of course, you now have Treasury yields on the 10-year note. It's quite competitive when you think of the dividend yield for the S&P 500. So how does that play into your investment strategy, especially as you look at the second quarter?
So for the longest term, we always heard that TINA thesis, right? There is no alternative. And now, as you mentioned, there is an alternative in the bond market. And you will actually see that the majority of the portfolios that we've been opening lately for our clients are balanced portfolios where they're combining some core fixed income strategies along with their large cap equity components because they want to have the benefit of both of those, a little bit juicier yield on the bond market than what they were seeing in equities for a while, but still knowing that that trend is higher for the equity markets, but not wanting to chase the market, Conway. And I think that's key here. We're talking about the different sectors of the market that are doing better depending on the day, right? Tech just got slammed last week. It actually is doing quite well today as yields came back a little bit. So don't chase the market. Find those names that have strong balance sheets, that have good growth potential, that have a business model that makes sense. put those in the portfolio and ride those out a little bit. Otherwise, you might get caught in some of the whipsaw that we've seen over the past couple weeks.
And before I let you go, we got some details yesterday, Wednesday, from the White House in terms of the infrastructure plan and how they're going to pay for it with higher taxes, higher corporate taxes. So now, what does that do? I know it kind of was in the atmosphere, but now that we've actually heard that that's the plan coming out of the White House, how does that impact strategy going forward, knowing that, yes, the White House is going to try to get a tax hike through?
For the immediate term, it's not going to change our strategy right now, because these companies that we've been buying, companies like Nvidia, companies like Broadcom, these are companies that are continue to be strong and have growth regardless, and actually will get a benefit from some of the data infrastructure plays in the plan. The key, though, I think, is to watch and see, does this bill get passed as it is, or does it have to be combined with this second bill we know is coming, and wait until later in the year to go through the reconciliation process? That changes the outlook on it. So we'll be watching that closely to see how it plays out.
All right, great. Thank you. That is Victoria Fernandez. She is the Chief Market Strategist at Crossmark Global Investments. I'm Conway G. Gittens, and this is Reuters.